Hello and welcome to the FinTech Finance Arena. I'm your host, Doug McKenzie, and on today's episode, we're going to be talking about the huge changes that are happening in the payments infrastructure scene. And joining me today, I have two guests who are right at the heart of this changing ecosystem. First up, I have Charles de Rougé from Bottomline Technologies. Charles, how are you doing here today?
Hi, Doug. Very well. Thank you very much for having me.
Absolutely. Well, it's an absolute pleasure to have you on the show. And Charles, for our audience, you might not be aware, could you tell us a bit more about yourself and Bottomline Technologies as well for that fact?
Sure. So my name is Charles de Rougé. I'm the head of SaaS solution at financial messaging Bottomline. I'm based in London. I've been with Bottomline for 7 years, and Bottomline helps multinational banks, financial institutions to make it pay and get paid simple, smart, and secure.
Amazing. Thank you so much, Charles. And also joining us is Nicole Coates from the Payment Systems Regulator. Nicole, how are you doing here today?
Yeah, pretty good, thanks. So far.
Amazing. Now, well, so far, well, let's hope this virtual arena just makes it even better. So, Nicole, for our audience who might not be aware, could you tell us a bit more about the PSR and your work there, please?
Yeah, of course. So the PSR is quite unusual in a couple of respects. There's no other regulatory authority that quite has the remit that we do anywhere else in the world. And what we do is we're kind of an economic regulator of payment systems. So the infrastructure that sits in the center, rather than payments themselves, we look at the big bits of financial infrastructure and whether they can be a bit better and whether they can move along a bit. So we have 3 statutory objectives, and I'm not going to give you the full spiel, but I'll try and do this a bit quickly. We have to promote competition, innovation, and the interests of service users. So we're always looking to see what could be slightly better, what could be slightly more competitive, what could be slightly more kind of meet the needs of the people that use payment systems day to day. So that's what we do. Within the PSR, I'm one of the PSR's payment specialists in the policy department, and that's a slightly weird role. So it's sort of an internal consultancy sort of role. The idea being we have an awful lot of very clever economists and lawyers, and they know everything there is to know about the Financial Services Banking Reform Act and kind of monopsonies and so on. But sometimes they need a bit of help with payments concepts. And so we have a handful of people that work at the PSR here to provide that sort of background. Before I joined the PSR, I used to work for Citigroup in change management. And I've been at the PSR about 5 years now. So I feel that was quite a lot. So,
yeah.
But
I mean, it's a big remit. And yeah, well, I can't think of anyone better placed to join us on this conversation as well. So thank you so much, Nicole. Nicole, I guess I'm going to stick with you then to kind of see your perspective of how you think that the role of a COO has changed at a bank or an FI over the last 5 years or so. You know, how have you seen that really galvanize?
So it's sort of interesting from my conversations with stakeholders in the last 5 years, how there's been an increasing shift towards payments as a kind of concentration in itself, as something that banks need to look at in terms of payments rather than in terms of it just being kind of a corner of ops that does its own thing and what have you. Now, some of that I think is to do with the possibilities that technology brings as we sort of get into the use of APIs and so on, that sort of thing. But I think my view is that banks are taking a much more strategic view of what they can do in the payment space. And I'm concentrating on banks because that's where I've seen the change. But that's how I'm seeing it playing out. You'll have to remember I'm a step removed from banks these days, so it's a bit of a kind of observer's view, but yeah, that's how I see it.
Definitely. And that having that top down, but part removed perspective, I think was so important. And Charles, with that in mind, would you agree with what Nicole's saying? And would it be fair to say that the role has actually become one of the most important within a financial institution with all the external pressures now placed on it?
Yeah, I completely agree with what Nicole has just said. I think the role of a chief operational officer and the payment infrastructure has become a strategic line of investment for banks. As Nicole said before, it used to be something you have and you just make it happen well. And yes, new technologies, new regulations, but also also layers of investment has made the role of a CEO and the payment infrastructure strategically critical for a bank. I think that today that makes the difference between a successful banking business or not, and the expectation of consumer, the expectation of clients, of corporates or others are much higher than they used to be. So yes, it's a drastic change.
Interesting. Now, following on from those external factors then, Charles, what are some of the biggest issues that you can unpack from those? What are some of the biggest issues still plaguing payments infrastructure that COOs are actually having to deal with now that were maybe left over from 5 or so years ago?
Well, I think there's a few. We did a recent survey, and interrogating them. So I'm gonna just try to share some of the answer we received from them.
Thanks.
And I think one is the layers of legacy systems. During years, the investment on that area was not central or strategic, as we said. So you just add layers of technical complexity over another. And now that we got new technology, new regulation, new payment rails that are coming to the market, it makes the challenge of CEO around interoperability, the ability to speak to one system to another, the scalability, the ability to onboard more volumes, very challenging. And I think, the modernization, the digital transformation, the legacy layer of system, those are one of the few challenges, but there are many, to say the least. Yeah.
And Nicole, could I also get your perspective on that as well, please?
Yeah, so I come from a change management background, but that's some time ago now. Now, one of the things I've been working on in the last couple of years is we published the PSR strategy in January. And in that, we talk a bit about one of the problems being kind of the coordination and getting things done across the market when there's so many different perspectives and so many different interests. And what I want to sort of draw out of that to this point about kind of infrastructure and all the rest of it is that there's understandably a big focus on technology and the benefits that technology can bring. And we're seeing already the kind of APIs that I already mentioned bring new benefits and new ways of doing things. But some of the old challenges remain, and a lot of technological problems are in fact political problems. And how you solve those is not moving at the same pace that the introduction of new technology is necessarily moving at. So I think there's a real challenge here for the payments industry to think about how we all, and I include us in this, how we all get better at kind of moving forward agreements about how you use these new infrastructures, how you use new types of architecture and those sorts of things. That's just as important as kind of APIs have changed everything. They have, but they haven't changed the need for people to set ideas about how they can work together and how they can work across the market, I think.
That's really interesting. It's the technology that's been implemented is so exciting, but actually you really need to set that groundwork down. And I think that's so important. That actually leads perfectly onto my next question, Nicole, and the fact that we are seeing these rapid changes in payments. That the speed of innovation has been absolutely exponential. So what are your recommendations that you need to kind of get in a row first before embarking on some of these really exciting changes?
So I was really interested to hear what Charles was saying about this kind of legacy system reliance, because that's the traditional problem, right? That you have so much tied up in very safe systems that have never let you down, and the challenge of moving to a kind of real-time environment where you can make fraud decisions and you can make payments is a really big one. But I think what I'd like to encourage from a sort of regulatory point of view, given that, why should anyone listen to me these days about how their change programs should be structured, is that I'd quite like people to think about the sort of core philosophies of payments. Innovation happens really quickly, as you say, around in some places, and those some places are generally kind of at the periphery where you're not dependent on cross-market standards or cross-market infrastructure to do something. And the pace of that kind of central stuff is not always as quick. And I think there's opportunities to be grasped to talk about how we can, and I think I've already said this a bit, but how we can kind of get innovation at the center moving with the excitement and pace of innovation around the periphery, and working together to do that sort of thing.
Yeah, I think that's absolutely brilliant. And I almost hate using the phrase, but it does have to be a holistic movement within the organization. These are large ships, to use a metaphor, and to turn them, you have to be turning everyone in unison. Now, we've heard the regulatory perspective from Nicole there, Charles, but I mean, can I also get your perspective as well from Bottomline? You guys work on the tech side as well. Yeah, how do you guys fit into that? And what are your recommendations for COOs of banks too?
Yes, of course. I think, again, I concur with Nicole first. I think you got all this innovation, but if everybody moves it in their own direction, it actually stops working. And actually working with the regulator and anticipating, which we try to do at Bottomline as well, will help. But I would say my advice to a CEO with all this change is to take a deep breath, yeah, and first, yeah. And I think today you cannot throw everything that used to work fine because you want to move real time. And there's a global common approach about using partners, yeah. I think what Nicole was saying about those change appearing at the periphery and then coming. Us at Bottomline as being an agile fintech and being an innovator, we advise our legacy clients of banks and financial institutions on how can we make the best of technology without throwing everything away, like what I call the hybrid model, using a centralized approach, taking advantage of the new technologies like API, like real time, like microservices, of course, but also moving at your own pace to keep the fraud control, to keep the compliance, to keep the efficiency and the visibility on what's happening. I think this is a key element. And I use these four concepts often, which are connect, control, comply, and then compete. And this is our core module at Bottomline, if I may say so. But this is about how you address those changes. First, you need to connect to those new payment rails, those new things. You need to ensure that you got the right amount of control. Then you can comply with the regulator, with the right things to do, with the right level of operational efficiency and fraud control and detections. And then you can compete, not being a laggard and being an innovator, and grow your competitive advantage.
Yeah, I think it's a brilliant way to kind of see all those parts connect, and then you can move along in an actual agile approach, but after you've taken that first deep breath. Now, speaking of those innovations, one of the biggest changes is finally coming to the topic of our conversation is the very infrastructure of payments and how that is evolving. And yeah, we've been gently talking about how these payment rails are going to be evolving, how this new one's going to be added. So Charles, with these payment rails being added, you kind of touched on in your last answer, and I as someone that's not actually working within a bank, it'll be interesting to get your perspective on how this works. How can financial institutions actually streamline these payment rails together? Or is this something you're going to see COOs actually have to deal with divergent ones, new ones added all the time?
Well, Doug, I preach from my parish here, but I believe in a centralized approach. Yeah, I believe this is what we do at Bottomline, and I believe that yes, partnering with a fintech, a SaaS, a payment service provider, a service bureau, and starting to centralize your approach to payments by combining on what I would call an hybrid model, combining your legacy system and adding those new payment rails. Now, it's not just aggregating Tetris block. No, it's about having a holistic approach, like you said before, and being very focused on what makes the difference. There's a lot of players that can say, oh, we can do everything for you, dear bank, come to us. But I think the difference is what you need is not a supplier, is a trusted partner that anticipate, that work with the regulator, that's an innovator, that can give you the peace of mind that the level of security, the resiliency, the availability, the disaster recovery, all basic needs for a bank CEO, that you ensure that a change project is not gonna challenge your existing operational efficiency. It's gonna bring eventually to the central platform, to a central hybrid model, actually bring a more consistent approach to security, to limits, to beneficiary validation. We got new tools that actually are retaking old principle, which is try to be as safe as you can be when you make a payment, when you wire money. Verify that the identity of the people are the right identity, you know. And I think today the hybrid model, the platform, centralized platform, partnering a bank is the best way to grow, to scale up. And then, of course, you as a CEO, you need a plan. I mean, let's be serious. This evolution won't stop tomorrow morning. There are more coming.
Yeah.
I think Nicole could tell us that the regulators are also looking at new things that are coming because they're helping shaping out all this innovation together. That means new mandatory compliance requirement, new audit requirements. So once you find the right partner and you use a centralized platform, you can start having a plan on putting all your system at the right level and having a long-term plan, not necessarily a dangerous, violent, quick disruption plan, but a long-term plan on how you're going to roll out your system to the best level of operational and compliance expected.
Yeah, I think that's absolutely brilliant. But before we dive further into the fraud elements there, and the kind of security elements, because obviously a lot of banks and a lot of COOs care very deeply about that, I want to understand a bit more about the positivities that come from the end user, the customer, and also some of the opportunities that come from adding these new payment rails. And Nicole, I wondered if you could talk us through that and how these various payment rails are kind of being instigated to help the consumer and where you see them going.
Yeah, so I guess some people watching this might know that if you ask somebody from the PSR about payments infrastructure, they're likely to start talking to you about the MPA. So the thing about the MPA, which Pay UK are going to deliver in the near future, is that what it should allow us is not just greater interoperability, but some degree of greater flexibility. So that those challenges that I talked about innovation being dependent on the speed of kind of the slowest people in the class and that sort of thing, we should be able to get round some of those questions by the added flexibility that the MPA model gives people. But what I think I'd also like to suggest to people is that there's within the thin clearing layer message, even within kind of the base functionality of the new payments architecture, there should be some sort of opportunities to have a look at. For instance, can you improve reconciliation? There should be greater degrees of kind of information flow within there. What do purpose codes do for your business, and what do they do for your payments models and those sorts of things? And those are opportunities to think about payments in a slightly different way. We don't have to sort of inherit all of the concepts that were decided in BACS in 1968. There's a chance now to have a look at kind of some of those flows and see whether they still make sense for your business and see whether they still make sense for your consumers. Customers, I should say. Doesn't have to be consumers, more businesses. So I think there's a great opportunity there, and I hope everybody is sort of looking at it from that perspective, that it's not just about everybody being forced through. It's not just a kind of maintenance upgrade. We're just doing something because it will fall over if we don't do it for long enough. There are opportunities here to do something sort of slightly better. And just to go back to my theme about innovation, we do have a lot of very bright economists here, and they will have a long think about what innovation is and whether it's the big, new, exciting, explosive, disruptive idea. But sometimes innovation is looking at what you've got and making it slightly better. And I think there's quite a bit of scope for that in the next few years as we think about what the MPA will deliver us and the flexibility it should provide for businesses.
Yeah, and that flexibility is going to be so critical, as you say, for the businesses that are really operating in new times for themselves as well. You must remember that. And we're seeing a lot of SMEs really embrace these new payment rails and really quite enjoy them and get access to new customers. So I didn't want to just focus too much on the kind of restraints that this innovation brings a COO, gives them headaches, because actually COOs are actually spearheading a lot of this innovatory change. But one thing that also does need to be changed from how we looked at things back in 1967 And one thing that this new payments architecture or NPA can provide is a new way to tackle fraud, because fraudsters are also evolving. And Charles, can I ask, how are institutions that are looking to operate at the speed, when it comes to the speed of payments now, and also the various different payment rails, how can they kind of mitigate this risk, as bankers love to do?
I think it's essential, Doug, and the fraud is a growing subject of wariness, and we have to tackle. So there's a couple of things. First and outmost, the usual best practice of securities should still apply to new payment rails as they were before. So segregation of data and duties, multi-factor authentications, limits on approval payments, proper approval workflow, proper process of flagging a transaction should still be applied. Then you have new technologies that are very interesting, like machine learning and artificial intelligence, that used to establish profile of transactions or profile of user behaving within the system, and they're going to flag anything out of the ordinary, and that will prevent the fraud. That will detect an intention of fraud ahead of the fraud happening. But even thanks to the regulator, we got new tools. Like in the UK, we're very advanced with a tool called confirmation of payee, known as the acronym COP, which is leveraging on real-time API, application program interface, which means the banks are communicating between themselves and preventing the most common fraud these days, which is the account payable fraud, which is you think you're paying your supplier in electricity or your supplier in a telephone, and actually you're paying something else. And confirmation of payee, which is a technology that Bottomline is partnering and providing to banks and FI, gives you the ability in real time for the banks to make sure that the payment of their clients is addressing to the link between the account number and the account name is the right name. So stick to the old good process always. Try to leverage the new technology with machine learning and artificial intelligence to prevent fraud, and use the great innovation coming from regulations and new technologies like confirmation of payee, also known as beneficiary account validations. If you start combining the thing, because you're on a centralized platform, because all of your payments will now go through a centralized processing monitoring, you're in a very good position to take advantage of those innovations rather than being a challenge. As you said, Doug, from a CEO, it becomes then a strategic advantage. If you can say to your client that they got much less risk, that their money is protected, that their payment is protected to happen in real time with the right level of fraud protection, I think it's a great competitive advantage.
Yeah, I mean, as a customer that can barely remember 8 digits, being confident knowing that the account number is correct that I'm paying into, that sounds absolutely brilliant. So absolutely amazing. And Nicole, I'd also love to get your perspective here, because Charles has just talked about how actually the regulations are enabling a strategy of opportunity around fraud to use it as a value case. I'd love to hear your perspective too.
Yeah, so I like to think we've helped in a small way in this bit with giving. So we gave direction to some of the UK banks that they needed to introduce this confirmation of payee checking that Charles has just spoken about. As time goes on, that will extend further throughout the payments ecosystem in the UK. That's the idea. Let me just talk a tiny bit about the history of that. So really, how we ended up with confirmation of payees, because back in the sort of prehistory of the PSL, back in 2016, 2017, we ended up with a super complaint from which about authorized push payment scams. And this is one of the remedies that we identified to help with authorized push payments. Now, just to unpack that a tiny bit, when the whole idea here is that there are some types of fraud which, the consumer has done everything they possibly could, have been tricked into thinking this is a legitimate payment. The fault is not really with them. They have been as kind of careful as they could have been, and nonetheless, people are losing money, partly because of this kind of BACS, like say 1968.
The old system.
Yeah. But the thing about BACS is that back in my old bank, you had a bit of slack to sort of check these payments when you came in. Faster Payments doesn't afford you that. So when you've got this additional risk from instant payments combined with a lack of kind of verification that the account details are right, then it has added up to this huge problem. Now, when I used to work in change management for a retail bank, and I used to sort of think about the implications for fraud and those sorts of things, if I had gone to my seniors with a request for lots of money to do an anti-fraud project on push payments, I can tell you now I wouldn't have got very far. There's back in kind of the early 2010s, there wasn't the recognition of this as a problem, and I think it strikes at something fairly fundamental about how we think about when we're specifying the next generation of payments infrastructure, and when we're thinking about how do the rules sort of align with that infrastructure, about whether some of these ideas about irrevocability and what have you can be relied upon, given that we know where it's landed us in the past, that we've got this massive headache. We've also got the sort of, we inherit a liability model from the Payment Services Directive as well. So there's a bunch of difficulty around liability, where the money gets taken from, what banks can truly do. And I think to manage that risk, you'd be looking very hard at sort of beefing up your capacity and capability for fraud on these types of push payments, which traditionally has not been a focus for the sort of the reasons that I was talking about.
Yeah.
And if I may, Doug, ISO 222, which is also one of the biggest change that we see in payment infrastructure, which is a good example of an initiative that is becoming a new technology that is becoming something that we all adopt at the same pace, at the same time. There are tiny variation per country and per type of payments. But ISO 222 gives you the ability to add much more data into each payment. And that data is first a challenge for any CO, but also an opportunity to reduce fraud, to have better control, to make sure the reconciliation is happening better and quicker, to make sure the payments are in the right direction with the right information. And in the future, even much more possibility with what we call data analytics, with, if you start embedded a lot of data through ISO 222 to your payments, you can start using trends. You can start using predictive trends of what happened in those type of payments on those industries, what happened in those, even predict some trends of payments, of money movements, of balance. So I think, again, this is another example of those challenges for CO, and we talked at the beginning about how strategic roles are not only operational challenge, but also opportunities to make their business stronger, to make their bank more competitive, and to grow market share.
Yeah, I think that is. Oh, please, Nicole.
Sorry, that's precisely right. I couldn't agree with that more. And I think this ties into what we were saying about the new payments architecture as well. So the new payments architecture will run on ISO 220. I'm going to get it right one day. 222. And exactly these sort of opportunities that I was hoping that firms will unpick from this, because I think there's a lot more we can do. I think there's another layer of thought to be applied about when you have kind of new entrants, non-traditional sort of FIs joining the market now and making use of open banking, API capacity, that sort of thing. You're getting payments initiated from a different sort of source. And I think there's possibly a thing to think about there, about whether there's contextual information that can be provided in that could help some of these decisions. But that, I should say quickly, that is not foreshadowing the role of the regulator. I am not about to storm to my MD and say we should be giving direction. I should be very careful. But I think one of the things that the great strength of kind of the API revolution has been that it's flexible and people can develop quickly and move on. One of the kind of things that we have to think about now is actually, is there enough information in that space? And if not, what do we do about it? It's great if the central clearing message is information rich. If there's a bit outside the central clearing message that, you know, isn't providing information that people need to rely on, what do we do about that bit, I guess?
Interesting. Okay, so ISO 20022 might actually not be enough then, Nicole. Is that what I'm thinking?
I think I didn't say that.
Sorry.
Doug, I think what Nicole meant is actually is the same as the beginning, is we need global adoption of ISO 20022. That means systems and the back systems as well, which a lot today are not. And if you want to make use of that, because if that information is only on central clearing or central network, well, only those have all the information, and then the information is actually truncated when it comes back to the end processing system on the old legacy, on the old. What Nicole is saying is the new joiners, they don't know any legacy system. They all operate full ISO, so they're gonna be there straight. They're gonna have all the information. I think at Bottomline, we help and guide our clients to go through programs and systems to migrate step by step to the full ISO. And I think in the future, between the NPA, but also, you know, the international SWIFT network also is pushing to the migration to ISO. We see the instant payment scheme in the world, whether in Switzerland, in the States, in the United States, or in other countries, are also based on ISO. And I think this is good. They will still need help of regulators and help of partnership between new joiners, fintech, and legacy banks to find the right level so that the information can be used at its maximum. I think it's going to take a little more time than being used immediately, but it's very promising. And again, I think it's better to look at it as an opportunity for future rather than just a regulatory or a compliance challenge at the moment. That would be my message.
Yeah, and I just to sort of build on that, I think that's precisely right. So ISO 20022 is pretty clearly the good answer for central clearing infrastructure, I think. So it gives us interoperability. It means that firms who have already built links to 100 switches elsewhere in the world can more easily connect to the UK's financial infrastructure, and that's got to be good for us, right? That's got to be good for all of us.
Absolutely.
What I'm sort of trying to dig out is that there will be some questions of payments operation and how you process things that are unpacked as you decide how to fill out those fields and as you decide how to use the message set. And the philosophy that you unpack while you're doing that, if you like, philosophy, this is how I'm going to do the operation of my payments. We need to think about that across the entire ecosystem. So it's great that the switch does ISO 20022. That's really good for us. It's really good for the UK's ecosystem. As you move out, you want that information to be as accessible to PISPs or to somebody else down the line, so that throughout the ecosystem, you start realizing the benefits of this additional data, and that you don't have kind of just clearing bank to clearing bank, lovely rich data in the center, and then kind of a drop off of what happens everywhere else. If that makes some sort of sense.
Yes. Yeah, totally. You have to democratize the acceptance of ISO to every player in the payments ecosystem. You can't just have it segmented between the acquirers and the
sort of the concepts that flow through ISO, just getting those across the industry, I think. But I shouldn't try and do architecture on the fly. So
no, but it illustrated it perfectly to me. And I do apologize for not considering what you meant in terms of actually being able to access it. So it's absolutely excellent. So I think we're coming to time, guys, but it's been absolutely insightful. And I don't know, in a minute or less, if we could kind of get your perspectives on where you see the future of payments infrastructure and your last kind of insights. So I mean, Nicole, I don't suppose if you could kick us off, maybe even consider it to the next 2 years. I need to start shrinking my my crystal ball predictions because payments is moving too quickly now.
It is. So we've already covered the NPA at some way. there's really interesting things happening with the Bank of England on CBDC. Now, I don't think that's going to replace traditional payments, and I don't think the Bank of England think it's going to replace traditional payments either, but that's an interesting thing. There's, you know, it's going to be something that we might have to think about how to build integration if the Bank of England takes that forward and decides to do something. At this point, I'm supposed to talk about the rise of private stablecoin, but I'm sort of a bit watch this space on that. But what I think my kind of overall sense of this is that even as we talk more and more about kind of the benefits of decentralization and what have you, I think that payments gravitate towards centralization, and we're going to see a continued reliance on central concepts, central ideas, central infrastructure, and that's not really going to go away anytime soon in the next 5 years. As exciting as it is to talk about kind of what can we do without that central reliance, I think the time, and I'm not sure the time will ever come in payments where we can entirely do away with how do we coordinate across the market, how do we get ideas across from one set of banks to another. All of those things are kind of generally dependent on having some set of central infrastructure and central ideas about how to use that infrastructure.
It's a refreshing take, and it's one that's really, really impactful because, as you said, the current zeitgeist is always talking about the opposite. But actually, when you boil down to it, you do need those rails. You need the infrastructure. It's been created for a reason, and it's how you innovate the things that you know, not new things, but some of the old things you were doing to play a game in the new ecosystem. I think is going to be very exciting. So thank you so much, Nicole, and Charles. Thank you to wrap us up as well. Your insights too, please.
Yes, Doug, I think I agree with Nicole. I think the future of payment infrastructure in the next 2 to 5 years will actually not be completely decentralized at all. I think we will see more of that hybrid model. I think we will see more of new payment rails, still request to pay, new tools to fraud prevention like COP, confirmation of a payee. Those things will be combined with the good old instant payment, backs and chaps that happens in the UK if we talk about those traditional payment methods. So I think what we will see is a natural evolution towards modernizations, towards better control, towards real time, and ISO 222. Those are threads that will not leave, that will not disappear or be swallowed by other modernity initiatives. ISO 222 and real-time API payments, these are going to happen. What you need to do as a bank, as a CEO, is really to embrace this as an opportunity, not as a regulatory challenge. And I think you will see that for your customer, for your business, there are opportunities to grow a competitive advantage.
Yeah, I can't think of wiser words. You've seen in the last 5 years so many banks that have really got ahead of the game, embraced the regulation, and they've seen value added to everything that they do, but post that. So guys, thank you so much for your insights. It's been absolutely incredible hearing your perspectives and taking away the various different elements from that. It's been absolutely excellent. So thank you very much. And also a massive thank you to our audience as well. You can catch the rest of the series and much more over at ffnews.com, of course, YouTube, but especially LinkedIn, where you'll see me in the comments. Nicole, Charles, thank you so much and have a lovely day.
Thank you very much. Bye-bye.